Stock investing is the biggest scam in history. Fortune telling welcomes you all. Why does our stock market have so many investors losing money? The most painful thing in life is not just losing money, but actually losing everything. What does it mean to lose everything? During the 2008 financial crisis, I witnessed almost everyone who invested in stocks appear on television and in the press with faces of anguish. Some even contemplated suicide when all stocks plummeted. Whatever you bought, you lost money. At that time, people were grappling with two main questions. 1. Should I sell my stocks now? 2. If I don't sell, what if the losses get even worse? They described their money as water being heated, then evaporating, disappearing without a trace. And then they blamed the government, blamed economists, arguing that policies couldn't save the economy. This is precisely why the stock market has so many investors losing money. They lose money but don't know who took it. Then they blame those who do technical analysis. Blame bad luck. The stock market is a zero-sum game. If you lose money today, someone definitely made money, just like gambling. If 10 people each bring $100 to a casino, even if one person wins everything, the maximum they can win is $900, because that's the total amount in the game. The question is, when a financial crisis hits, if everyone around us is losing money, who ultimately took the money? I once read a survey showing that in the US stock market, the average loss per investor, during certain periods, was about $10 to $20. The important takeaway isn't the specific number, but this: if you invest in the stock market and manage to lose less than this average, it statistically means you're already better than most investors. The long-term rule of the market is that most of the money doesn't end up in the pockets of the majority, but flows into the hands of a very small group of truly powerful players. They are divided into 6 groups. And today I will reveal this, possibly offending many powerful figures, even without relying on any backing force. I hope everyone will support me with a like to help prevent this video from being taken down. The first group is brokerage firms and banks. Why, when you turn 18, are you told you must learn about stocks? Because as long as you make a transaction, profit or loss, brokerage firms collect commissions. If you don't have money, they are happy to lend it to you at interest. Therefore, this group almost always profits in the stock market. The second group is the government. They collect taxes. The third group consists of people with inside information, such as major shareholders of listed companies or certain high-ranking officials. Previously, news emerged revealing that some U.S. officials sold off stocks before the government publicly announced the severity of the pandemic. At that time, many citizens weren't even wearing masks yet, still thinking the situation wasn't that worrying. The fourth group is newly listed companies, IPOs. They issue stock from scratch. Thus, some companies might only earn tens of millions, but when they go public, the net worth of the business owner can increase to tens of billions. Because they aren't making money from business operations, but from the stock market. The fifth group is legendary investors. Individuals with their own philosophies and trading systems, enabling them to make money long-term. Personally, I am a trend investor, which allows me to achieve stable profits. Who do I follow? That's the sixth group. The sixth group is precisely the hunters, the large investment funds. During the market evaporation process, the truly wealthy are them. They quietly enter the market. The amount of money in their accounts is unknown, but it's at least hundreds of billions, possibly trillions. No one knows the exact figure. What is known is that this amount is enough to help them manipulate the entire market. One of the most famous hunters is George Soros. He arrogantly declared that stock manipulation is the law of the jungle in the animal world, specifically targeting the weak, and he has never failed. Among the 6 powerful groups, the hunters are the strongest because they can control when stocks soar or plummet. These fluctuations are only known in advance by these 6 power groups because there is a tacit understanding among them. It could be due to their possession of in-depth analysis, or possibly because some information circulates internally. I can only speak vaguely like this. But one thing is certain: the time they make the most money is when the market collapses. The more small investors participate, the more money they make. So how do hunters manipulate the market? Why are small investors always like young grass, leeks, chives jukai? Cut down only to grow back, just waiting for the next harvest? And how can one become one of these 6 powerful groups? If you watch this video to the end today, I will risk sharing that. My channel specializes in sharing the mindset needed to get rich, becoming an entrepreneur, an investor, and a wealthy person. If you don't want to miss this information, you can subscribe for free and turn on notifications. First of all, small investors are always in a state of information asymmetry. You don't know who is manipulating stock prices. You also don't know if the industry experts are setting traps or planning something. At that point, you will fall into the psychological traps set by market manipulators. This is no different from a mind control game. To put it bluntly, those with malicious intent can use it to defraud assets, even luring you to dangerous places like Cambodia. Have you ever heard of the Blue Whale Challenge? This is a death game from Russia. Anyone participating is completely controlled and threatened by the organization behind it. And no one can survive to the end. Outsiders might think it's ridiculous, thinking the participants are too stupid. But in reality, those people didn't know they were playing the Blue Whale Challenge, nor did they know the final task was suicide. This is no different from participating in the stock market. Small investors don't realize that this market is essentially a casino. They also don't know that if they keep betting, the only outcome will be losing money. The mechanism of the Blue Whale Challenge is very simple. Each day, it gives you a small task, such as not talking to anyone for a day, or waking up at a specific hour to record a video talking to yourself in the mirror. Later tasks become harder, like self-harm, and the final task is suicide. Outsiders might find this absurd. These games exploit a critical human weakness. The more you invest, the harder it is to quit. For example, you are waiting for a bus. You've been waiting for half an hour. At this moment, you think, if I leave right now and the bus appears immediately after, haven't I wasted 30 minutes for nothing? This lost time is called the sunk cost. The players of the Blue Whale Challenge are the same. At the last moment, when the final task is suicide, they will ask themselves whether to follow through to complete the game or give up. If they give up, it means all previous efforts were meaningless. They think, I've overcome so many challenges, tortured myself to exhaustion, to the brink of pain. Yet if I stop at the end, won't it all be pointless? No, I've come this far. I can't turn back. I can't lose. Today you buy stocks. Once you've invested money, regardless of profit or loss, you will only continue to invest more and more. Why? Because if you invest $1 million and lose $500, you'll desperately want to win back the lost money quickly. The only way is to invest another $1 million. If you invest $1 million and profit $500, you'll want to earn even more next time. You'll put in another $1 million. Then pour in both principal and profit, increasing the total investment to $2 million. This is greed and fear. All scam models rely on this. Once you put in the first coin, the scammer will lure you into investing the second amount. At that point, even if friends around you try to stop you, you won't listen, not because you haven't considered the possibility of being scammed, but because you don't dare face the truth. You don't want to accept that the money you've already spent is completely meaningless, that the result you expect will never happen. To escape reality, you deceive yourself and sink deeper. From a young age, teachers told you to study hard for a stable job later. But when you enter society, you realize that to advance, you must compete with others, while you yourself still worry about basic necessities. You just work blindly from morning till night. Then one day, an epidemic hits. People around you lose their jobs. You're lucky to keep yours. But now work isn't just about survival, it becomes a battle. Flattering the boss and the owner. You remain stuck in a cycle, just hoping not to be fired, trying to hold on until your children grow up. But then what? You still have house and car payments. Even when you retire, you don't dare to rest. Meanwhile, why can we travel freely around the world while money still flows into our pockets? Because we have built an automated money-making system on the internet, where customers actively seek us out. What we do is called marketing, not direct sales. Now, think about it. If the game clearly stated from the beginning that the final task was suicide, would you find it crazy? Just like when you first entered the stock market, you surely believed you could make money. That's why stocks have such a low entry barrier. Even if your parents criticized you, even if others looked down on you, as long as you are 18, you can open a trading account and have the chance to change your life overnight. Unlike gambling, no one calls you a gambler, they only praise you as a financial expert. But in essence, it's no different. Initially, everyone just considers it a trial, putting in a little money to experience the excitement. Stop when you feel it's enough. No gambler, from the very beginning, declares they must get rich overnight, become the winner in life. But some people lack self-control, refuse to accept the fact that they've lost money. They think, even winning back a little is good. Once this thought arises, they fall into the gambler's black hole. They continue to bet, but often, the more they bet, the more they lose. The more they lose, the less they dare to face the reality that what's lost cannot be recovered. They sink deeper into unrealistic expectations that cannot be fulfilled. Then continue betting more. Just like that, a negative spiral pulls them onto a path with no return. The gambler's black hole is a black hole because once you get close, you get sucked into its vortex. What keeps you trapped isn't the external traps, but the trap you set for yourself. What truly pulls you down isn't the market, but the weakness within you. You need to understand, the cost you've already paid in the past is history. It's not the cost you bear at the present moment. For example, you waited 30 minutes for the bus, but whether you continue waiting has nothing to do with the 30 minutes already lost. What you need to consider is, if you continue waiting, will you be late? Should you call a taxi instead of waiting? The stock market is the same. Your next investment decision shouldn't be based on how much you've lost before, but whether you can afford to lose more. If you use this money now to buy a house, would it be more beneficial than investing in stocks? These are the things you need to think about. But most people can't overcome this hurdle. They cling to the money already lost. It's like asking why first loves always leave people lingering with regret. Is the ex-partner really that good? Not necessarily. What makes it unforgettable is the feeling of first love. It's precisely for this reason that scammers in this world always have opportunities. And in the stock market, the leaks, referring to small investors, are never depleted. The more people play, the more become prey. Experts just need to wait a few years for these leaks to grow. Then exploit an economic event, like the past epidemic or the current annual interest rate hike cycle, to pull stock prices down and harvest a large batch. So, how do the experts at the top of the pyramid use their massive capital to manipulate the market and harvest small investors? First, where does their money come from? There are many sources: insurance funds, investment funds, bank loans, or even the pension funds the government forces you to contribute to. But the usage rights are in their hands. They control hundreds of billions, even trillions. With capital large enough, they can suck up all the stocks in the market into their hands. Next question. How are stock prices determined? If you've studied economics, you'll know the law of supply and demand. When everyone wants to buy stocks, but the number of stocks in the market is limited, the price increases. Conversely, if few people want to buy, but too many stocks are being sold, the price decreases. So how do we assess the market's supply and demand? We look at buy orders and sell orders. Suppose in the stock market, there are only two people. I want to buy one stock at $10, so I place a buy order worth $10. At this time, Mr. Vu next to me wants to sell at $10, so he places a sell order of $10. When these two orders match, the transaction price is $10. But if I place a buy order worth $1 billion, and Mr. Vu only places a sell order of $10, the matched price will still be $10. Understood? Now, suppose 10 people want to buy the stock at $10, but only 9 people want to sell. When the 9 buy orders are matched, one order remains unfilled. If this person really wants to buy, what must he do? At this point, he can only offer a higher price to find someone willing to sell to him. Suppose he places a buy order at $11, but still no one agrees to sell. If he still wants to trade, he continues raising the price to $12. Finally, I can't resist the temptation and sell to him. Then the stock is traded at $12. This $12 price is the current price of that stock. The next person wanting to buy or sell this stock can refer to the $12 price to make a decision. We call the buying side those who predict the price will rise, so they are called the long side, buyers. Conversely, the selling side are those who think the price will fall, so they are called the short side, sellers. The fluctuation of stock prices depends on whether the force of the buyers is stronger or the force of the sellers is stronger. Not just stocks, but gold, silver, even tulips or agricultural products. As long as they are commodities freely traded in the market, their prices are determined by this mechanism. This is precisely why experts and hunters in the market can manipulate prices at will. Suppose I am a financial expert, and a few years ago when Bitcoin was only a few $100s each. What would I do to make a profit? The answer is simple. First, I must ensure that most of the Bitcoin is in my hands. Therefore, I will continuously buy. I don't need to buy all the Bitcoin in the market to manipulate the price. I just need to keep buying. And the price will automatically rise due to increasing scarcity of supply. For example, previously many people were willing to sell Bitcoin at $600. But as supply decreases, the next person willing to sell might only agree at $800. This causes the gap between sell orders to widen. If before I had to buy step by step from $600, $601, $602, $603, now because fewer people are selling, the price will jump directly to the $800 level. Thus, I don't need to spend too much money. Yet I can push the price up until most of the Bitcoin in the market belongs to me. If I don't sell, then no one else sells. At this point, I have complete control over pricing the market. Suppose someone wants to buy Bitcoin at $1, but no one is willing to sell because most Bitcoin is in my hands. At that moment, I just need to place a sell order at $10. To create a fake effect, I can use $10 myself to buy back that Bitcoin. Meaning, just transfer money from the left pocket to the right pocket. In this way, I can push the price as high as I want. The result is that the whole world will see on the chart that Bitcoin just jumped from $1 to $10 in an instant. At this moment, my total assets have increased tenfold with just $10. But the problem is, even if I push the price up to $1 billion, it's still just paper profit. On the surface, my assets seem to have multiplied 10 times. But to truly turn that money into cash in my pocket, I must sell all the Bitcoin I hold. This is the ultimate goal. However, when I start selling off my Bitcoin to cash out, I might not find buyers. Although I pushed the price high, if no one wants to buy, I'll be in an awkward position. If I keep trying to sell, the price will plummet sharply. And in the end, I might not make much. Maybe even lose money if the buying power is too weak before I finish selling my Bitcoin. Therefore, the first crucial step is to exploit the gambler's black hole mentality, short-sightedness, and herd behavior of people to ensure there are enough small investors willing to buy in. When the economy was worst due to the pandemic, the US government started printing money massively. At that time, even if you knew nothing about investing, you saw Bitcoin and stock prices rise dramatically. So what would you do? Most people don't know how to react, so they choose to observe what people around them are doing. When you see Mrs. My next door, a 70 to 80-year-old lady, also taking her pension money to invest in stocks and crypto, you still hesitate. But a week later, you see her moving out to buy a villa. At this point, you can't hold back anymore. You open an account and deposit money to invest. The result is, when you enter the market, it's precisely when stock and crypto prices peak, and you become the bag holder helping the experts exit safely. Don't regret it, because if there's a next time, you'll still do the same. You might think you only lost money on paper, but in reality, you became the scapegoat for the experts' plan. However, even if many people buy in, as I start gradually selling my Bitcoin, my ability to manipulate the market also diminishes. At some point, if I haven't finished selling even half my Bitcoin, those who bought in later might also start selling off, causing the price to drop sharply. At this moment, I need to find a way to lock in profits without losing market manipulation ability. That's why the derivatives market was born. Financial experts will leverage the difference between the spot market and the futures market to short sell in the spot market while simultaneously executing opposite trades in the derivatives market to secure profits. This is the hedging strategy. Here's how it works. Suppose when I hold most of the Bitcoin supply in the spot market, I don't need much capital to push the price up. For instance, I raise the Bitcoin price in the spot market to $10, while in the futures market, the Bitcoin price is still at $1. Seeing such a large discrepancy, investors will immediately buy futures contracts. Futures contracts have a specific expiration date. For example, effective 1 month later. At that time, the contract buyer has the right to buy Bitcoin at $1, regardless of the market price then. If 1 month later, the Bitcoin price in the spot market is still $10, the contract holder only needs to spend $1 to buy 1 Bitcoin worth $10, instantly profiting $9. Because of this large difference, many investors will rush to buy futures contracts, pushing the contract price higher. Meanwhile, I just need to place sell orders for futures contracts at a high price in the market and wait for the orders to be filled. When the number of contracts I sell in the futures market equals the amount of Bitcoin I hold in the spot market, I have completed the hedging. At this point, my profit is locked in, and the only thing I need to do is wait for the contract expiration date. I will deliver my Bitcoin to the buyer according to the agreed price on the contract. And thus my withdrawal process is complete. I can exit the market perfectly. Understood? Simply put, it's pushing the Bitcoin price high in the spot market to then short sell in the derivatives market at a high price. Then withdraw money and leave. Many people have paid dearly in the investment market, even losing their entire life savings without knowing where the money went into whose pocket. But actually, you are not wrong, because you are just striving for progress, hoping to bring a better financial future for your family and children. However, you need to realize that in a freely traded market without intervention, the rules are always set by the strong. You have two choices: either become strong yourself, or learn to follow the strong. Like what I am about to say. When we have nothing, the most important thing is to build a career with our own hands. Not rush into investing, very simply, because the capital we have is too little. Winning doesn't amount to much, but losing is unbearable, especially if you are new. You absolutely cannot risk using leverage or borrowing debt to invest. Therefore, you must have a business that generates automated income. During the pandemic, traditional businesses took a heavy hit, but viewed from another angle, this is a sign that it's time for us to transform. Delivery services, online shopping, and online courses all thrived thanks to the pandemic. Nowadays is the internet era, and all businesses are choked by two words: traffic. Today's world is a 2.0 world. Whoever has more attention will make more money. With platforms having the largest followings today being YouTube, TikTok, Facebook, this is the opportunity for ordinary people like us to turn the tables. We can do business right in a place with more foot traffic than Times Square in New York. Without paying rent, without inventory, without knowing English, even without having to live in New York. Even so, we can still generate income up to millions of dollars per year sustainably. Due to time constraints, we'll pause here. I share free knowledge on how to become rich, entrepreneurs, and investors to achieve financial freedom. If you don't want to miss out, follow my channel, turn on the notification bell, and share this video with everyone. I also send my best wishes to everyone who liked this video. May you all achieve financial freedom soon. If you find just one or two helpful quotes in today's content that improve your life, I will feel fulfilled.